Do you know what Warren Buffett look out for when it comes to buying stocks? Here is what Warren Buffett looks for before buying any stock. So if you are a beginner, you may be struggling to take your first step to analyze the company you wish to invest in. Because there are so many areas like example, financial numbers and jargons to watch out for. Warren Buffett, the greatest investors of our time, has averaged about 20% annual returns over the past 50 years. And that's more than roughly double the S&P 500 index. He spoke at 2025 Berkshire Hathaway Annual General Meeting and was asked during the Q&A what he looked out for. And here's the transcript that captured what he said. Yeah, it is that one thing we really never talk about here. But I spend more time looking at balance sheet than I do income statement. And Wall Street doesn't really pay attention to balance sheet. But I like to look at balance sheet over the 8 to 10 years before I even look at the income account. Because there are certain things that's harder to hide on the balance sheet than you can with the income statement. So what Warren Buffett meant is that we study the balance sheet over a period of time, we can understand how it changes and we can spot the risk before we invest in the company. So what is a balance sheet? It is a financial statements that show these three things. What you own, which is known as the asset, what you owe, which is the liability, what is left or retained, which is the equity. So imagine this, you own a burger store, inside the business you have $10. You borrowed $3 from your friends. So what is left that is really yours? $10 minus $3 equals to $7. And that is the equity for the store. At the end of the day, you want this equity to be positive and growing. So where can I find information about the balance sheet? Say for example, you are interested in Amazon stock. Head over to fiscal.ai, key in the ticker symbol AMZN, head over to the financials, and next, click on the balance sheet. Scroll all the way to the bottom, you will see the equity. I want you to analyze the total shareholder equity, which is also known as the net worth of the company. It shows how much value that is truly belong to the owners. We want it to be positive and growing over the past 3 years. So when equity goes up over time, it tells us that the company is making money and keeping some of it instead of losing money. And most importantly, the company is building shareholder value. So the next time when you look at the company, do you know what to look out for?